Hey, what's up, guys? John here. Hurricane Hilary has been an absolute disaster for Southern California, the Baja Coast, as well as Palm Springs. Now, many people, certain areas, they weren't hit that bad. Other areas, they were. Look at Dodger Stadium. Look at Dodger Stadium as an example. That is a real problem for insurance companies and property owners inside of that area. Now, they estimate that it's upwards of $2 billion in damage in just California. Now, when you look at that scenario, and then you look at what happened in Hawaii just 2.5 weeks ago, 2,200 structures burned. You had many people pass away. You had a scenario unfold with 2,000 acres burned. Look at Canada. Canada has a problem right now with so much damage, so much loss, all unfolding at basically the same exact time. What people don't realize is all these losses are going to get built up and they're going to get pushed off onto the everyday American. Property insurance rates are going to continue to soar over the next 12 to 24 months. I read a book about 2 years ago, and this book was from the CEO of Carlyle, and in this book he interviewed a variety of different billionaires, many of which were in real estate and investing. And he asked them, in nearly every single billionaire he asked, what are your thoughts about the massive repricing of assets due to the change in climate? And he asked every single person that. Now, back then, I'd read that book, and I'm like, okay, well, now we're looking at this scenario, and, it's going to be very unique and interesting to watch how many investors pull out of certain markets, they dive into other markets. We're going to witness areas where people can't get insurance. It's going to change property values in a big, big way. I'm going to break this down for you because this is absolutely crazy. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on. And if you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time. We are in it right now. It started, 2020. Now it's ramping up. Next 2-3 years is going to be crazy. It's going to be absolutely crazy. You're going to want great credit, 750, 760, 770 credit and above. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, you have a problem on your credit report, book a free strategy session at greatcreditfast.com. You can click the link just below the video. It takes 2 seconds. Schedule a strategy session. Don't ignore it. In many cases, one negative item in your report can stay there for up to 7 years. Up to 7 years. One late payment can drop your score upwards of 180 points. So don't let one situation ruin your future. If you need help, we'd love to help you at greatcreditfast.com. Take a look at this. So this is Baja California, right? Baja California. This is absolutely crazy. Like, this looks like something out of a movie, right? I mean, you look at what's happening right now, Palm Springs. Palm Springs and other parts of Southern California face the threat of flash flooding along with landslides and mudslides today after Storm Hilary unleashed record-breaking downpours overnight. This is a massive debris flow in Palm Springs. Now look at the other angle here. I'll show you because he flips the camera and shows the other side of that bridge. Well, look at what's happening here. This scenario. The storm broke rainfall records across Southern California. Palm Springs got nearly a year's worth of rain inside 24 hours. One of the rainiest days ever. Death Valley nearly set a record of 1.68 inches, and the Furnace Creek area, which usually gets about 0.2 of an inch in August, got 0.63 inches. Well, we're starting to see massive power outages as well. And right here, California braces for life-threatening flooding. Up to $2 billion in damage and loss from Storm Hilary. What's very fascinating here is that in June, two of the largest insurance companies in the state, they pulled out, they stopped renewing policies. And you're starting to see a lot of insurance companies do this now. I mean, look, this is State Farm, which is currently the largest home insurance provider in California, made headlines earlier this summer after it announced that it would stop insuring new homes in the state. Now, I'm going to show you what's actually going to happen here, because many people, they might get, step 1 of this, but they don't understand what's going to happen step 2 and step 3, and that's where the real money is going to be made. I'm going to break this down for you in just a second, but I want to show you what's going on with insurance because it's important, and it's going to fuel step 2 and step 3. So, after it announced it would stop insuring new homes in the state, citing historic increase in construction costs rapidly going catastrophic risk, and reinsurance market challenge is the reason behind its decision. Allstate, another heavyweight in California, also quietly stopped issuing new policies, property insurance policies, in the state in June, and others still, including AIG and Chubb, have both declined to renew policies for thousands of homeowners living in California, citing climate catastrophe and a pricing structure that does not allow them to increase their premiums annually. That's prompted a number of homeowners in California who have lost coverage to soar in recent years, and non-renewal home insurance policies spiked a whopping 30% in 2021 compared to the previous year, according to most recent data from the California Department of Insurance, right? So California officials say that it's because of climate, right? It's because of climate. So look at this. How is this going to really play out? Well, here's how it's going to play out. This scenario, people need to pay attention to this website, because this website is going to be so important, and it really tells us what the future is going to look like. So you click C40, right? And you look at UK government, Ministry of Foreign Affairs, Denmark, Federal Ministry of the Environmental Nature Conservation, right? You start to go through this website and you're looking at some of these big names. You take this seriously. Take it seriously, because it's going to happen. You have George, he's everywhere, right? Everybody knows George. You got FedEx. You got some really, really big names, some really big companies. You have, Hillary, World Bank. You have a lot of power on this page. And this page has a game plan for Los Angeles. If you click Los Angeles right here, you click View City Profile, you click Accelerators, and you can read all the changes that are going to be taking place in California, from equity pledges, divesting from fossil fuels, Green Food City Accelerator, Green and Healthy Street Accelerator, Zero Carbon Building Accelerator, where they're going to basically retrofit all these properties to make them compliant with all these changes. So all these changes are going to be extremely costly. It's not going to be free to retrofit, do a hard retrofit on a building. I mean, in some cases, a simple little house might be $100,000. So we enact regulations and/or planning policy to ensure new buildings operate in net zero carbon by 2030, right? All these changes, and they have a roadmap. It's going to be really, really interesting to see how this kind of plays out. And you're going to be reporting annually on progress, right? It's going to be crazy. So look at how this is. So you click here, energy and buildings. So you can kind of see how this plays out here. They say implement and enforcing building energy regulations and mandatory performance standards for existing buildings, including measure, reduce embodied emissions, right? Benchmarking whole life cycle, incentivizing and implementing nation or city-wide actions towards grid decarbonization. And so up here, it kind of gives you like the worldwide view of their targets. This is the building that we live in, caused nearly 60% of emissions in C40 cities, right? And that they want to build 1 billion new homes by 2025. Now, of course, they're not going to hit that, but they always set like this very, very, very big target, and they'll say, you know what, let's pull it back a little bit. We'll extend it. We'll give you guys a favor. We'll extend this a year, 2 years, but they eventually will always kind of get there, right? And so about 6% of buildings that will exist by 2050 haven't been built yet. This means constructing a city the size of Stockholm or Milan every week until 2050, city the size of Singapore or New York every single month, right? So, and they support these cities by implementing ambitious building energy efficiency initiatives and catalyzing the cleaning of the energy supply in line with this target, right? So you look at this and you're like, okay, well, how does this connect? Well, look at what Biden, this is on whitehouse.gov, of course you can see the header, which set a bold goal to reduce homelessness 25% by 2025 and ultimately build a country where every person has a safe place, right? And this is including the entire state of California. So, question, how do you reduce homelessness in a place like California with over 100,000 people homeless and reduce that number and only have, 25% homeless, right? Reduce it 25% homeless. In the next year and a half, at the same exact time, the cost of everything is going to continue to rise. Insurance rates are going to likely continue to rise. Homeowners mortgage interest rates, everything, cost of properties are going to continue to rise. And then you're going to now have retrofit requirements that are going to be soon coming and starting to become more mainstream and public news. This is all happening. This is all happening. But Main Street doesn't realize that just yet. So you have to ask yourself, if you're looking at commercial real estate, residential real estate, and you're looking at the cost to borrow money right now, let's just say you want to buy a $500,000 home, and you're borrowing at today's mortgage rates, and you're putting 6% down, your mortgage is $4,300 per month. That's at today's insurance rates. Wait until it comes time for renewal. You're going to likely continue to see that number rise and rise and rise. Every single year, it's going to get more and more expensive. The big question is, how many people are going to be able to afford $4,500 a month, $4,600 a month. Not many people. So you're going to see more and more and more of a demand for an affordable solution. And so that affordable solution will then come into more of a conversation of we need more housing. We need to find a way in which we can draw rents down. But when you have commercial real estate over the last couple of years, you had investors left, right, and center investing in commercial real estate, buying 3 caps, 4 caps, 5 caps at very, very low interest rates, 3%, 3.5%, 4% interest rates. They now have to refinance into a 7% interest rate environment with increased insurance and rents that are continuing to soften. You're going to have a lot of these, these operators turn their keys back to the bank. And I believe what's ultimately going to happen is the bank is going to look for the highest and best use for these buildings. They're not going to want to hold on to these assets, but they may offer incentives or pass the keys to somebody else to start to do conversions. We're going to start to see a whole new change in the real estate market. It's unfolding in the name of environment. Everything's going to change because of it. Everything. And so if you're a real estate investor, you should be paying attention to all these changes, because this is also coming alongside the Renters' Bill of Rights, in which allows tenants a whole slew of new ways in which they can, gather more strength together. They can unionize. They can, there's so many different new things. One way is which they don't want the landlord to be able to pull their credit. Instead, they want to be able to allow the tenant to provide their own information that the landlord will have to go off of. And if the landlord denies them, they'd have to put in writing. Think about the exposure and liability that the landlord would have to put as to why that tenant is getting denied. And tenants would then also get access to free legal assistance, free legal help, free legal networks because of all of these new changes. And so if you're a landlord and you don't really have much margin in your deal, which is a lot of landlords are investing in real estate thinking rents are going to continue to climb at 20, 30% a year. It's absolutely laughable. But a lot of landlords believe that. When rents start to go back and they start to pull back more and more and more, that 3 cap that they bought, or 4 cap, now they're in the red. And when it comes time to refinance, it's going to be a problem. It's going to be a big problem. I think we're going to see a massive wealth transfer unfold in the state of California. I think there's going to be a lot of opportunity to invest in the state of California. There's going to be a lot of opportunity to invest in many, many markets, because this map here, this isn't just California. You click, you look around here. You got DC, Philly, you got New York, you got Boston, Chicago, San Fran, Phoenix, Portland, Seattle. It's a lot of the big cities. You're going to start to see a massive wealth transfer. And all these losses, Hawaii, Canada, California, I'm telling you, the problems aren't over. It's going to continue to get pushed all across America. And this affordability crisis, this inflation problem, is only going to fuel more and more defaults. What do you think about this entire scenario? Do you think we're stepping into the greatest wealth transfer in real estate that we've ever seen before in history? I think so. I think it's going to be far worse than 2008. But I'm curious what you think. Inside of these wealth transfers, money is never lost, it's simply transferred. It's transferred to the one that has cash, that's prepared, have credit. They're in a position to be able to take on and close on those deals. You want to position yourself for that opportunity. If you want to fix your credit, we'd love to help you. My company, greatcreditfast.com. That's greatcreditfast.com. And catch you guys in the next video.